Aloha students. In this recording we're going to talk about chapter 3, which is all about process costing. Okay, as you remember, in the last chapter we talked about job costing, that is keeping track of costs by jobs or projects or some kind of discrete unit. And remember, we use job costing when we're able to split up what we do into jobs or projects or that type of thing. Process costing, on the other hand, is keeping track of costs not by projects or jobs or discrete units, because it's for things that are mass produced and in a continuous process. So you're doing the same thing over and over and over again. So it's not, what you do is not broken out into segments like jobs or projects or that type of thing. Okay, so again, it's used for small, low-cost items usually when you're just continuously doing the same thing all the time. And you can't really trace cost directly to each unit of product or to a job or a project. Okay, so similarities between job costing and process costing: you have the same goals in both. You want to know the cost of the products. Okay, and there's the same type of same type of cost flows. So direct materials, direct labor, manufacturing overhead are in both. And for overhead, you use, if you remember from chapter 2, predetermined overhead rates to allocate or spread out manufacturing overhead. It's just how we spread it out and what we spread it out to that's going to be different between these two things. Okay, so a summary of the differences. In job costing, we're accumulating accumulating costs by jobs or projects. We have work in process for each particular job. So we're working on one job at a time, and if we're still working on that job at the end of the period, that's considered work in process. Okay, it's good for unique, high cost jobs, custom jobs. Okay, and again, it's things that you can separate out into projects or jobs. Usually here, custom order kinds of stuff. For process costing, we don't accumulate costs by jobs, but we keep track of costs by departments or by steps in the process, as we'll see. So we have a work in process account for each department or steps in the process rather than for each job, because there are no jobs in process costing. Process costing, again, is used for identical low-cost products. So if you're doing the same thing over and over and over and over again, and it's just a few products or one product that you're making. Okay, so okay, again, we've seen this cost flow before, but a little bit different. So we have the three costs: direct material, direct labor, and then overhead, that go into work in process, just like for job costing, except in this case, we have different departments, so we have a work in process account for each department. So in this case, all of the costs go into this work in process A, Department A, and once Department A is finished with doing what they need to do, then the work in process gets transferred to Department B's work in process. And then they also add direct material, direct labor, and overhead. Yeah. So work in process is not for a single job, but it's by department, and each department has a separate work in process. So again, in this case, Department A does something first. When they're done with what they need to do, they transfer it to Department B, who then works on it, and then they transfer it when they're done to Department C, etc. Okay, so process costing, there's separate work in process accounts for the different departments or processes or steps in the process. And here's when In this case, there's only 2 departments, so when Department B is done doing what they need to do, they transfer that cost of goods manufactured to finished goods. Okay. Remember, cost of goods manufactured is how much did it cost us to make the product. Cost of goods sold is how much did it cost us for the products that we did sell. Yeah. If we sold everything we made, these two amounts would be the same. Cost of goods manufactured, cost of goods sold. Okay. If we sold everything we made, these are the same. Okay. If we made, let's say, 100 things, the cost would be here in cost of goods manufactured. And if we only sold 30 of those 100, the cost of those 30 would be in the cost of goods sold. Okay, so cost of goods sold, cost of goods manufactured, the cost of how much it cost us to make everything. Cost of goods sold is what was that cost for those things that we sold. Okay, so the concept of equivalent units is kind of easy conceptually, but kind of hard in practice to try to calculate this. You can think of equivalent units as if something is only partially completed, or if it's only partial, how many partial units will equal a full unit. So for example, if you got 2 half pitchers of water, that's the same as a full pitcher of water. Yeah. So the equivalent units for 2 half pitchers is 1 pitcher. Okay, so it's a kind of a similar concept. If you got 1/3 and 1/3, that would be 2/3 of an equivalent unit. Yeah. So the concept is kind of easy, but let's look at the calculations of those. So the cost per equivalent unit is the product cost for the period, so how much it cost us during the period, divided by the equivalent units. Now, equivalent units takes into account partially completed items. So it's all the items that you completed, all the products that you completed, plus full units of those partially completed units. Okay, so here's an example. So let's say there's this company started 15,000 units during the period, and they completed 10,000 of them, which means there's 5,000 not yet finished. Okay, so those 5,000 that aren't finished are 30% complete. That's equivalent to 10,000 that are completed, so that's 100% done. So 10,000 times 100%, plus 5,000 that are 30% done. So 5,000 times 30% is the equivalent full unit. Okay, so the 10,000 that are totally done, again, if they're totally done, that's 10,000 equivalent units. 5,000 that are 30% done, that's equivalent to 1,500 fully completed units, 5,000 times 30%. So that's a total of 11,500 equivalent units. Okay. So again, the concept of equivalent units is if you're done with them and completed them, that's 100% equivalent. If you're not completely done with them, you figure out what percent complete they are, multiply by the number of units that are left to be completed, and that gives you the full equivalent unit, full units that are complete. So 30% times 5,000, 1,500 are complete. Yeah, so 5,000 units that are 30% done is equal to 1,500 units that are totally done. Okay, now let's assume that the cost for production was 27,600. So the cost per equivalent unit is the 27,600 divided by the equivalent units, or $2.40. Okay, notice we don't divide the cost by the total 15,000 units that we started making because they're not all done. So we have to take into account the portion that of the ones that are not complete that are done. So in this case, 30% done. Okay, so a couple of terms first. Conversion costs. Conversion costs are labor and overhead. Oops, you can see here, okay? So the cost to convert raw materials into a finished product. So what it takes to finish or to convert raw materials are labor and manufacturing overhead. So conversion costs equal labor plus manufacturing overhead, okay? Here's some average cost formulas. We won't go over those in detail now. We'll take a look at some of these in the homework. Okay, production cost report. Okay, so the production cost report, as you can see, has all of these attributes, shows the flow of units and costs to the work in process. So it shows you how much units that you worked on basically during the period. It also provides cost information. What did it cost us to produce the goods that we worked on? It shows the breakdown between completed units and units that still need to be worked on. And the whole purpose of this production cost report is to help managers control the department. Okay, so here's the steps in preparing a production cost report. So the first thing you do is figure out the physical flow of units. So how many total units are there? How many total units did we start? How many total units did we finish? How many total units do we still have left over to be done? That's the physical flow. How many actual units are there? The second step, convert those actual units to equivalent units. Just as we saw in the earlier example of those 5,000 units that were 30% complete. So actual units was 5,000, but the equivalent units was 1,500. Okay, so again, we got to convert the actual total to equivalent number of units. We compute the cost per equivalent unit, as we saw earlier, and then we use the unit cost that we figured out in 3 to determine the ending inventory and cost of goods transferred amounts. Okay, and we'll go through those steps. Okay, so let's say this company uses process costing to determine unit cost in 2 departments, A and B. Okay, so they use the average cost method, which is the number of equivalent units for each cost element equals the number of units transferred out. So that's the total that we totally finished. That's the 100% part, plus the number of equivalent units in ending inventory. So again, whatever we have left over, we see what percent complete those units are. So here's what they want us to do. In this example, they want us to figure out the number of equivalent units, the cost per equivalent units, the cost of the goods that were finished and transferred out. This would have been clear if it said and transferred out, but okay, if they're done, that means they're going to move them out, right? Then cost of the work in process ending inventory, okay? So let's go through these in detail. So at the beginning of the month of May, they had 20,000 gallons, okay? And for conversion cost, they were 30% complete. Again, remember, conversion costs are the labor plus the manufacturing overhead. Okay, we spent $7,000 on materials and $7,500 on conversion costs, and we had $40,000 of costs that were transferred into Department B. Okay, so 180 gallons were transferred in from Department A in May. 170,000 were completed by Department B in May. In May, we added in Department B $63,000 worth of materials, $220,000 worth of conversion cost, and then we transferred in, so when Department A was done with the product, that was the cost of that was $360,000. And then at the end of the month, we had 30,000 gallons of the product that were 40% done. Okay, so it still needs 60% more work to be done on it. Okay, so notice all materials is added at the beginning, Department B. So for materials, as soon as they start the process, all the materials are added. Okay, and we'll see how that works in a second. Okay, so the first two things we do is trace the physical flow of gallons. Then we convert those gallons to equivalent units. The gallons that were transferred from A to B are 100% complete with respect to A. That makes sense because A wouldn't transfer those gallons to B unless they were done with it. Okay? And because the material is added at the beginning of Department B, the gallons are 100% complete as to materials when the process starts. So because they're telling you all the materials that are necessary for this product is added right at the beginning, so all of the materials are in the product in Department B, regardless of whether it's finished or not, because all the materials are added right away. So as soon as they start working on the product, 100% of the materials are in there already. Okay, so first thing here is you look at the actual flow of the product. We know we started with 20,000 gallons. That's given in the problem. And we're looking strictly at Department B here. Okay, so they started with 20,000 gallons. 180,000 were transferred from A to B, so that's 180,000 gallons additional that was put into Department B during the month. So that's a total of 200,000 gallons that we have to take into consideration. What we already had there at the beginning of the period and how much more was added during the period and transferred in. Okay. We know we transferred out 170,000 gallons. Again, that was given. And the ending inventory then is 30,000. That's how many gallons we have left over. Because if we had 200,000 altogether, if we finished 170, that means we had 30,000 that's not yet finished. Okay. So the next step then is to look at the equivalent units. We have to look at the equivalent units of materials and conversion costs. Okay. So this column here is just duplicating these two things right here. Okay. We're looking for equivalent gallons for materials and for conversion costs. Because all the materials are added at the beginning of the process, materials are always 100% complete if that's the case. Okay, and in in a lot of processes in making a product, all the materials are added at the beginning. You always, put all the materials up front and then you just have some labor in order to finish it off. Yeah. So in the case where there's all the materials added at the beginning of the process, the equivalent units of materials is always going to be equal to the total actual physical quantities here. So in other words, this 200,000, the 170 transferred out, and the 30,000 ending inventory, that's going to be the same for equivalent units of materials. Okay, so equivalent units for materials is easy, again, as long as the assumption is all the materials are added at the beginning of the process. Okay, then we do the equivalent units of conversion costs. And remember, conversion costs are labor and manufacturing overhead. If 170 was transferred out, that means it's complete. Okay, so it's only transferred out if they're done. So if they're done, that must mean all the labor has been put into it. So the conversion equivalent units of conversion costs for the completed units is the same as the physical units. Okay, and that's always the case. So for transferred out, the physical units is going to be the same as the equivalent units, because in both cases, materials and conversion costs, those are both 100% complete. Okay, for the units still in ending inventory, the 30,000, and again, think of this transferred in as physical units. These are the actual gallons that are sitting there. Okay, for materials, again, as we said earlier, that's 100% because all the materials are already added once it gets started. So the physical units are going to equal the equivalent units of materials, again, if materials are added at the beginning of the period. Conversion cost, though, the problem, and let me go find it. The example here, example says they're 40% complete as to conversion cost. So 40% complete, that means 40% of the 30,000 physical units is 12,000 gallons. So that's the equivalent number of units of conversion costs. So again, 12,000 gallons is equivalent to 30,000 gallons that are 40% complete. Okay. So the total equivalent units for materials is 200,000. The total equivalent units for conversion costs is 182,000. Okay, and again, if the units are complete and they're transferred out of unit or department B, then the equivalent units for both materials and conversion costs are equal to the physical units. Materials equivalent units, if they're added at the beginning of the period, are equal to the physical units that are left over. And then the equivalent units of conversion cost for the ending inventory, you simply take the physical units, multiply by what percent complete the work in process is, and that's the number of equivalent units for conversion cost of the ending inventory. Okay, so again, we got $200,000 of 200,000 gallons of materials. That's the equivalent cost of materials. 182,000 gallons of conversion cost. That's the equivalent units for conversion cost. Okay, so the 200 and the 182. Then the next two steps in this production cost report. So we take that equivalent unit for each item, okay, and then you add it to the materials that were added, the labor and direct the manufacturing overhead that was added to the department. Okay, so, and then you use the cost per equivalent gallon to compute the ending inventory and cost of goods sold, or cost of goods completed. So here's the finished production report. Okay, we did the here up to here we got the equivalent gallons. We did this earlier. That's the 200,000 for materials, 182,000 for conversion costs. So the cost was $400,000 that was transferred in. So we had $400,000 of beginning inventory already. Problem tells us the cost of what was added, transferred from A to B, was $360,000. So that's $400,000 divided by the equivalent gallons. In this case, transferred in is the actual physical gallons. That's $2 a gallon. Same thing, we do the same thing for materials and for conversion. Okay, so the materials, there was $7,000 worth of materials in the beginning inventory, and the problem tells us that. We added $63,000 of cost in May. Again, the problem tells us that. So there's a total of 70,000 we have to keep track of. Divide that by the equivalent units of material. We get 35 cents a gallon for the material. And then same thing for conversion costs. We had $7,500 in beginning inventory of conversion costs. We added another $220,000 in May. So we got to keep track of $227,500. Divide that total by the 182 equivalent gallons to get $1.25 per gallon. Okay. Add all three of these up, you get the total $3.60. Okay. So the cost transferred out, we know that we transferred out 170,000 gallons times this cost per gallon gives us these numbers in the blue here. And then the number in the red is simply the 30,000 we have an ending inventory times this cost per gallon. So we have 30,000 gallons times $2 a gallon here gives us equivalent times cost per gallon. So gives us, we have, ending inventory cost is the equivalent gallons in ending inventory. So the 200,000, 200,000, like I said, times the $2 gives us 400,000. 200,000 equivalent gallons of material times 35 cents a gallon for materials gives us the 70,000. And the 182 times $1.25 gives us the 227,500. Okay, so we take the ending inventory units times the $2. So I think we had 30,000, 30,000 units left over in ending inventory times the 2 gives us 60. The 30,000 times the 35 for materials gives us 10,500. And then the 30,000 in ending inventory times $1.25 gives us 15,000. Okay. So that's a quick overview of the production cost report. You'll get into that in more detail when we go through the homework assignment related to the production cost report. Okay, but this was just a quick overview. So use this and or the example in the book when you're doing the homework for that. Just definitional kinds of stuff here, spoilage. Okay, spoilage is in any kind of process. Anytime you're producing something, there's going to be a little bit of spoilage. Normal spoilage is treated as just part of the cost of goods sold. So it's included, it's taken into consideration, I guess, in computing the costs. Yeah. So normal spoilage is simply the expected amount. So the amount you think you are going to be wasting during the process in the form of wasted material or products that don't turn out quite right and you have to dispose of them. That's normal spoilage. Abnormal spoilage is an amount greater than you expect. Okay, so in an efficient process, a certain amount of normal spoilage, but if it's greater than what you expect, greater than the norm, that's abnormal spoilage. Okay, again, don't worry about the journal entries for purposes of this class. This is just for your information. Don't worry so much about it. That's more of a accounting class type thing. So again, don't worry about journal entries. Okay, that's the lecture on chapter 3. Your quiz is on something in chapters 1, 2, and 3. Okay, so until next time, aloha.